Welcome to today's What Moved the Market show. I'm your host Prem. It's Monday, September 15th, 2025, and here is everything you need to know as the markets close for today. Indian equity markets ended a choppy session with marginal losses as investors turned cautious ahead of the Federal Reserve's policy meeting later this week. The Nifty 50 closed down 44.8 points or 0.18% at 25,069.2, breaking its 8-session winning streak. The BSE Sensex declined 118.96 points or 0.15% to close at 81,785.74. Bank Nifty managed to buck the trend, gaining 77 points or 0.14% to end at 54,887. Market breadth was mixed with 2,052 shares advancing against 1,756 declining. The Indian rupee strengthened 6 paise to close at 88.21 per dollar, recovering from recent weakness as the dollar softened globally ahead of Fed rate cut expectations. The day's star performer was RailTel Corporation, which surged 6.5% after securing a significant order worth 210 crore rupees from the Bihar State Education Council for network connectivity solutions. Alcohol stocks were in focus with Radico Khaitan jumping 3.8% and Atalite Blenders gaining 3% after Jefferies initiated coverage with buy ratings, citing strong growth prospects in the premium spirit segment. On the flip side, Mahindra and Asian Paints were among the biggest losers, both declining over 2% each on profit-taking after recent gains. Dr. Reddy's Laboratories fell 1.7%, dragging the pharma index lower, while Shriram Finance, Cipla and Infosys also ended in the red. The broader markets outperformed with mid-cap and small-cap indices rising 0.4% and 0.7% respectively. The Nifty tested its key support level at 25,000 but managed to hold above it, closing just above 25,069. The index found resistance near 25,150 during intraday trade but failed to sustain above these levels. For Bank Nifty, the index comfortably held above 54,800 support and is now eyeing the 55,000 resistance zone. The breach of the 8-day winning streak suggests some consolidation, but the overall structure remains intact with no major technical damage. Real estate emerged as the day's top performer with the Nifty Realty Index gaining over 2%, driven by positive sentiment around infrastructure spending and housing demand. Capital goods and power sectors also ended in positive territory, up 0.5 to 1%. However, consumer durables, auto, IT and pharma sectors declined between 0.3 to 0.6%, with the IT index giving back some of last week's strong gains. The defense index managed modest gains of 0.65%, extending its recent outperformance. Gold prices in India dipped marginally to 11,106 rupees per gram for 24-karat gold from 11,128 rupees on Friday, as investors booked profits ahead of the Fed meeting. Internationally, gold held near $3,646 per ounce, still close to record highs. Silver remained elevated at $42.24 per ounce, maintaining its 14-year high levels. Crude oil gained 0.76% to $63.03 per barrel, supported by geopolitical tensions and supply concerns. Looking ahead to tomorrow's session, the Nifty faces immediate support at 25,000 to 24,900 levels, with any break below potentially triggering further consolidation toward 24,850. On the upside, resistance lies at 25,150, followed by 25,200. Bank Nifty appears relatively stronger and could test 55,000 if it sustains above 54,900. The market is likely to remain range-bound and volatile ahead of the Fed decision on Tuesday night, with stock-specific action dominating. GIFT Nifty, trading around 25,100, suggests a flat to mildly positive opening tomorrow. Given today's consolidation and upcoming Fed uncertainty, focus on defensive plays and avoid aggressive position taking in index futures. Real estate and infrastructure stocks showing strength could offer selective opportunities, while profit booking in recent outperformers like IT and defense names appears prudent. Keep 25,000 as your key support level for Nifty. Any decisive break below could signal deeper correction, while a hold above keeps the bullish structure intact. Stay selective and preserve capital ahead of what could be a volatile week. Stay tuned for tomorrow morning's wrap, where we'll break down the Fed's historic decision and its immediate market impact. Send in your questions about sector rotation and defensive strategies. We love hearing from our listeners.